Hey everyone, welcome back to my show. I'm your host, Amin Dillon, and we all know that these days, buying a home is one of the most expensive decisions of your life. Now, on top of the hefty price tag, you may be on the hook for paying the GST or HST associated with it. If you're buying something that already exists, like let's say a resale, you don't have to worry about it. But if you're buying new construction, which is very popular here in Ontario, you will be charged these taxes. What you don't know is you might actually be eligible to get some of those taxes back. How much are we talking about? Well, you could actually be owed up to $27,000 back. Yeah, that's right. $27,000 could be coming back into your pocket. However, you may not get that money because you don't know how to apply for it. And it's one of the most common mistakes that people make when it comes to buying new construction. That's why in today's show, I'm sitting down with HST specialist RAMI MIRANSKY, who does exactly this. He helps his clients navigate the rebate program and make sure that they get the maximum amount that they're entitled to. So for us, he's going to be breaking down the whole program step by step and making sure that you're not missing out on some money. Here is my interview with RAMI. RAMI MIRANSKY, thank you so much for being on the show. What is HST and when does it get charged?
Okay, it's important to talk about the components of HST. HST has been around since 2010. Now it exists in five provinces, Ontario and the Maritime provinces. It also existed in BC, but they got rid of it in 2013. So it's Harmonized Sales Tax. It's actually a combination. It's important to understand that it's a combination between GST, the General Sales Tax, and the Provincial Sales Tax, which is different depending on which province you're in. So for example, here in Ontario, HST is made up of the 8% Provincial Sales Tax and the 5% General Sales Tax. When you go back history, GST was set up in 1991 and HST was set up in 2010, as I said. So you asked, when does it get charged? And we're talking specifically about new residential real estate. It always gets charged on new residential real estate unless you're building a home for yourself. If you are buying a home from a developer, whatever developer that may be, whether it's a subdivision home or it is a condo development or it's a townhouse development and it's new construction, HST will be charged on the purchase price. And it is 13% in Ontario and different elsewhere. In other provinces where they don't have HST, GST will be charged. So for example, in Manitoba, they will charge, the purchase price is $300,000. They will charge 5% on top of that $300,000 purchase price for new construction only, okay? But it is also important to understand what new construction means, because there's differences between what the federal government says is new construction and what the provincial government considers new construction. So for example, a one-off builder, for example, builds a new home or substantially renovates that new home. If their intent is to sell that and flip that home for a profit, they're engaging in a business activity, HST is applicable. But if it's a substantial renovation, many builders say, well, this is not new construction. But the federal government considers new construction as a substantial renovation when you do 90% or more of a renovation. So all four walls can remain standing. If you gut the interior, then the federal government considers that new construction and HST is applicable. So that's basically when HST gets charged, all new construction. But if I'm building a home for myself and then I live in it and then sell it on later on, HST does not apply. It is a resale property. So if you're buying a house from, a neighbor, or you decide to move from one part of Toronto to another part of Toronto and you buy a resale home where someone has lived in it for some time, that property is exempt from HST.
Oh, so when we talk about the HST New Home Rebate, tell us about this program.
Okay, again, applicable to new construction. And there are in fact three rebates. There is the HST rebate for homes purchased from a builder. There's which is called the GST 190 application. There are rebates associated with when you buy it as an investment property and you then decide to rent it and have a 1-year lease, and that's called a GST 524 application, and it's a rental rebate. And there is the GST 191, which is homes, owner-built homes. So either substantially renovated, as I discussed what the criteria of a substantial renovation is, or brand new build. So if I were to take my house, and I live sort of Midtown Toronto, and I decide, okay, you know, it's a little dated, I can either buy somewhere else, or, you know, it's sort of expensive. I'm gonna tear it down, build a new home. Well, I can get a rebate for doing that. And depending on how much I spend on that, I can get up to $16,080 for that type of rebate. But let's go back. Let's go through a more sequential process here. HST New Housing Rebates from homes purchased from a builder, a GST 190 form. Let's say, you're going to purchase a home for a condo for yourself, or a subdivision home for yourself as your primary residence. You sign an agreement of purchase and sale with the builder, and you are going to be eligible for the HST New Housing Rebate for homes purchased from a builder. But it's easy. You really don't have to do anything, because in the agreement of purchase and sale itself, there will be a clause that says you assign the rebate to the builder. But it doesn't belong to the builder, it still belongs to you. And when you close that property, and not the occupancy closing, but the actual change of possession, when the building changes from the developer's hands to your hands, you will be eligible for the rebate. But because you've assigned it to the builder, you will get credit for that rebate on your statement of closing adjustments. So you don't have to do anything. You don't have to fill in any applications. Your lawyer will ask you before closing, are you planning to move into this place as your primary residence, or are you planning to buy it as an investment? If you tell them it's your primary residence, they will say, okay, eligible for the rebate, we'll give you credit for it on your statement of closing adjustments. But if you tell them, hey, it's an investment, you won't get credit for it. You will have to apply for it after, as long as you have that 1-year lease in place. Okay, so that's a difference. The difference between somebody who buys it as their primary residence and somebody who buys it as an investment is you will get the rebate up front if you're buying it as your primary residence. But if you're buying it as an investment, you're going to have to make application for it.
Okay, as long as somebody rents it out for a year, even if it's an investment, you can get it back, the full amount.
Yes, yeah. You have to show proof of your agreement of purchase and sale, your statement of closing adjustments, and your 1-year lease, and make the application to the federal government in order to get that back. Now, it's important not to lie. Because people say, okay, I'll tell them it's my primary residence because I'll get that rebate up front and I don't have to worry about applying for it. But the government checks. They ask the builders for who's living in that apartment, and then they'll get a list of who's living in it. And if things don't match up, and if they see that it's somebody else living in there other than the owner, they'll contact the owner, who's the landlord, and they'll say, hey, you got credit for this rebate, you owe it back to us. And they might charge penalties and interest on that amount. And then you're going to have to reapply for the rental rebate. And you don't want to mess with the CRA on this kind of stuff, because they will nail you. It's easy for them to find out who's living in that building and who's occupying the units. And so it's important to be honest, because the money is it's really a timing thing. You'll get it back, but you'll just have to wait till they approve your rental rebate application for you to get it back.
Rami, let me ask you, what if somebody moves in as their principal residence and, things change and all of a sudden, they need to move out before the end of the year, then they rent it out. Is that going to have any indication on how they apply for that rebate?
Well, if they've lived in it for a fair amount of time and there's good reason why they're moving out. So the government talks about the terminology they use as a frustrating event. And a frustrating event can mean life changes, things like marital breakdown or job change and you have to move out of the city, or your child is going to go to another school which is 100 kilometers away and you don't have the ability to have them commute every day to go to that other school. financial difficulties or death in the family, those significant life events that you have really no control over sometimes. So that shouldn't have an impact on the change in the rebate status. But I should go back because there's another issue, and it happens all the time in the GTA with respect to sale of condos. There's what's called your assignment clause. So in many cases, somebody buys a home for, a condo for $300,000, and they see, wow, it's gone up to $400,000, $500,000. I can turn this around and make a quick $200,000 on this pre-construction condo that I bought 3 or 4 years ago. Well, first of all, so you have your assignor, who's the initial purchaser, and you have your assignee who will take over the obligation to purchase this particular unit. That assignee does not get credit for the rebate, even though it may be their primary residence. They don't get credit for it. They also, like the investor, must apply for it afterwards. And I would say, there's various articles that are out there. I saw one in a real estate magazine that says 50% of more people who buy for investment purposes or on assignment do not apply for the rebate. And it's a significant amount of money. It can be up to $27,000. Most times, depending on the purchase price, I'm not going to get into the actual calculations, but a lot of money is being left on the table by people who buy on assignments and who buy for investment purposes because either they're not aware of the rebate or the paperwork confuses them, or for lack of knowledge. They don't know about it.
Yeah, $27,000 they could be missing out on.
The important thing to understand also is there's a 2-year deadline to apply for the rebates from when possession changes. Not from when you get occupancy, but from when possession changes. So it actually belongs to you now, because that's the point in time that you've paid the HST, and now you can apply for the rebate. So if you've closed on June 1st, or let's use a better example, if you closed on March the 5th, 2019, and today we're at March the 4th, tomorrow is your 2-year deadline. And if you haven't applied and you go over that deadline, forget about it, unless you have some very, very serious life-changing events that happen. You were sick, you had to have treatment, etc. They won't consider even if you're out by a day, they won't consider that you've crossed that deadline.
Okay, so let's talk about the situations where somebody buys new construction and they're not eligible. Is there ever a situation where they wouldn't be eligible for it?
Yeah, if you don't occupy it or you don't rent it. If it stays empty, you can't apply because it has to be a residence, it has to be a residential unit. But there are other things that can gum up the works. And people, for example, a young couple, they need help with the financing. So they go to a relative, which is not necessarily that's immediate family, not brother, sister, parents, grandparents. If they get a rich uncle, for example, to help them finance, and that rich uncle goes on title, that can gum up the works because everybody on title is supposed to be eligible for the rebate, at least immediate family. So let's say, your dad helped finance the condo sale or the condo purchase, and he went on title. That's fine because he's immediate family. But if an uncle did it, who's outside that immediate family, then the government would look at it and say, well, not everybody here is eligible for the rebate. That uncle lives, in Whitby, and this condo is in Toronto. Sorry, we're denying the rebate. You can correct it, but it's difficult to correct. So it's important that title be limited to those who are actually going to reside in the unit and immediate family members, not a benefactor friend or not a benefactor, uncle or whatever, but whoever is going to reside in it plus immediate family. That's one thing that can gum up the works.
Okay, so what if somebody has multiple people on a deed? So I know people that are, young that can't purchase something on their own. They will partner up with another friend or another family, let's say, to be able to purchase something, right? Are they eligible?
They all have to move into it. It all has to be their primary residence. Now, if they're buying it for investment purposes, that's a different story. But if they're buying it as their primary residence, everybody who's on title will have to move into it if they're not immediate family.
Mm-hmm. But if it is an investment and they pool their money together to buy something, they rent it out for 1 year, they're all eligible. They can get that rebate
and
back.
In fact, as an investor, it can be a corporation, it can be multiple people, it can be even offshore residents who buy here for investment purposes, whether they're from the US, from Europe, from Asia, wherever they may come from. And you see that a lot, particularly in the markets of Vancouver and Toronto. A lot of foreign money comes in and they buy for investment purposes. I just did a rebate for someone who resides in Florida. He bought a condominium unit through his corporation, and the corporation got the rebate.
Okay, so let's talk about the process then. So let's say, somebody wasn't able to get the credit for the rebate, which is what you mentioned in the very beginning of this interview, which is the ideal situation. They got to apply for it. What does the process look like?
Okay, well, again, the process is a little different for each of the rebates. So when we're talking about the GST 190, which is purchased from a builder, the people who will be applying for that will be people who purchased on assignment. So they don't get it right up front, and the assignee now has to apply to the federal government for this rebate. So it's a form that you have to fill in with a bunch of numbers and a bunch of data, where you are, where you live now, and is this your primary residence, et cetera, and closing dates and prices, et cetera. You have to provide the government with your agreement of purchase and sale, your statement of closing adjustments, and your 1 year lease, because unless there's a long-term lease in place, and that lease could have started on occupancy, you just have to show the government your intent that you want to lease this for a long period. So there's often a huge gap between occupancy and now change of possession, closing. But so it could be 5 months, it could be 8 months. But you can only apply. You may have a long-term renter in there pre change of possession, but once possession changes and once that unit actually belongs to you, it doesn't matter that the long-term lease predates the closing by a few months. So you put that package together, you send it off with some signatures to the government. It's the HST department, the Business Services Department of the government. And within generally 6 to 8 weeks, a little slower now because of COVID, you'll get your money back. So that's number one. However, there is another issue with assignment sales. Going back to that example that I gave earlier, you bought on assignment, you bought it $300,000, all of a sudden you see, wow, this thing's worth $500,000, and you decide to sell. That's not a good enough reason to the government that would make that incremental price. So you're paying HST on the $300,000, but are you paying HST, the new purchaser, are you paying HST on the $200,000? Right? People often don't know the answer to this question. I've asked lawyers about this. I know the answer, but I've asked lawyers and real estate agents and accountants, and they're a little unclear. Clarity comes in when you talk about intent. So if it was the intent of the original purchaser, the assignor, to move into that unit, and he or she was frustrated by some event, again, going back, a significant life event like change of jobs and you got to move out of the city, or a death in the family, or a breakdown of a marriage, or a couple, let's say, who bought it and they were just a couple, but 4 or 5 years later, now they have the surprise birth of twins, and the single bedroom condo that they were deciding to move in now doesn't meet their needs. Well, that makes the incremental price exempt from HST. But if that assignor says, wow, I can make good money on this, or wow, you know, I was sort of going to move into it, but I decided not to now, that $200,000 is subject to HST. And most agreements of purchase and sale have standard clause in them that says HST is included in the purchase price. As such, a buyer, the assignee, when he pays that, for example, so he pays that 300 plus the other two for 500, he closes for 500, the extra $200,000 that he has paid has included HST, and that buyer is protected because the agreement of purchase and sale says it's included in the purchase price. It gets a little complicated, but the assignor might be liable to the government if the government finds out, and that $200,000 includes a significant amount of HST, about $34,000 of HST. The government can say, hey, you collected it, you owe it to us, right? And so these assignors are often surprised when they get notices from the federal government that says, you owe us money on the sale of this property that you sold on assigned. I always caution real estate agents and lawyers who are doing these agreements and these purchase and sale agreements that they should really be aware that there may be some repercussions to their assignors in terms of liability for HST.
That's a really good point, because imagine that $200,000 profit that person's thinking, they're now paying income tax on it and an additional HST.
It'll probably be a capital gain. It's an investment corporate. It's an investment property which they've sold. So that $200,000 gain will probably only be half taxed at capital gains tax, but they'll still owe that $34,000 of that embedded HST in it. But here on the other side, there's a good side to this for the buyer, because when that buyer closes, they only generally get one statement of closing adjustments, and that's from the builder. And that statement of closing adjustments will reflect the original purchase price of $300,000, and that original purchase price will have HST credits associated with it. However, that $200,000 also includes HST, and they can claim for the embedded HST for a credit on that embedded HST as well. And I give you a perfect example. I had a case where a young woman bought a condo in Pickering, and she bought it on assignment. So the original purchaser purchased it for $300,000, and she purchased it for $375,000. So that's $75,000 included HST, and it was easy to prove that it did, because in this case, this particular case, the original buyer was a holding company. And as a holding company cannot have the intent to move into a condo as their principal residence. So it had to be a sale that was completely subject to HST. But most people see the agreement, most people who do these applications, such as myself or anybody else out there who does it, or even people who do it for themselves, will only see one statement of closing adjustments and in this case, when you looked at the statement of closing adjustments and did the calculation, you see that the rebate coming back was about $22,000. But when it came into my hands, I saw that, hey, the original purchaser, the assigner here, is a corporation, is a holding company. And as such, that full $75,000 was subject to HST. And so rather than getting back $22,000, which this young woman was supposed to get, or thought she was going to get back, I managed to get her $25,000 back. She's very happy about that. And I would guess that 80 or 90% of HST rebate applications that go in for the assignees are done incorrectly, because people flipping, most of the times it's not a significant life event that prevents somebody from moving in. People get dollars in their eyes and say, hey, I bought this pre-sale construction condominium at $200 or $300 or $400, depending on where you live, or more, and now I can make a really decent $100 or $200 or $300,000, they don't understand that that $200,000-300,000 is also subject to HST, and they will be required to pay it to the government unless they can prove that their intent was originally to move in and it was frustrated by, you know, a certain significant life event like marital breakdown, you know, as we discussed before.
Okay. Quick question for you. I know you were mentioning that the maximum someone can get is $27,000 back if it's the original purchase, and let's say it's their principal property. Is there a minimum amount? Is there, like, how are the scales? Like, how does it work in terms of, so people have an idea of what they can expect to get back?
Okay, you can get back. You have to understand there's the provincial side, and this is a good question. Yes, it's the provincial side to the rebate and the federal side to the rebate. So the federal side of the rebate only applies to homes that are worth $450,000 or less, and the maximum that you can get there is $6,300. The provincial side, and it depends what province you're in. Ontario is the only province that allows the value of the property to exceed $450,000 to be eligible for the rebate, because in most provinces, until you, or other than, you know, just Ontario, unless if you exceed $450,000, you're not eligible for the rebate. That for one reason or another, I'm not sure, but I think it goes back to when GST was first created in 1991, and the average price of a home back there was possibly in that range, or that's what they considered the top range of, you know, homes. This is going back 30 years, of course. But in Ontario, as we know, an average price home is in Toronto, $800, $900, $1 million these days for $1 million for a single family home. And I don't have the statistics on a condominium, but I'm sure it's, you know, above $450,000. So in Ontario, it allows you to apply for the provincial rebate if the value of the property is greater than $450,000, but nowhere else. And the maximum on that provincial rebate is $24,000, and it represents 75% of the provincial sales tax. So if you do the math, a $400,000 condominium, 8% of a $400,000 condominium, which represents the provincial sales tax, is $32,000, and 75% of that is $24,000, and they'll allow that $24,000 maximum up until you get to $450,000 or above in Ontario, but nowhere else. If you go over $450,000, you're not getting that provincial. Okay, and on the GST side, it's 36% of the GST to a maximum of $6,300, and that's the limit there is $350,000. Well, 5% of $350,000 is $17,500. 36% of that is $6,300. Now, and that's the maximum you can get. So if the price of the unit is $400,000, the maximum GST portion you'll get, and sorry, there's a lot of numbers here, is, and the formula is 450 less the market value of the purchase price of the unit, which is 400, so that's 50,000, over 100,000, so that represents 50 over 100 represents 50%, and so the maximum federal rebate on that purchase would be 50% of the maximum, which is $6,300, which is $3,100. There are cases where you can get more than $27,000. Very rare cases, very rare cases. Came across a case where a person put a whole lot of money into their property in rural Ontario, and they spent way more than the actual value of that property. You know, they spent $500,000-600,000, but when a real estate agent came by and appraised it and said, you know, listen, you're out here and you know, way out here in the forest, away from major metropolis, the most you'll be able to get for this is about $320,000. So they were able to get back more because of the way the formula works. They bought land, they managed to get the $24,000 maximum provincial rebate. They got the $6,300 maximum for the federal rebate as well. And so they maxed out over $30,000. But just a very odd case. You don't see that happening very often.
Well, you never know these days, right? People might be moving
well,
further,
listen,
further
markets
away.
go up and down. Real estate, although it's been an amazing investment for the last 15, 20 years, you go back to 1990, when recession started hitting and property values started to go down, and it took a while to get out of that. So it goes in ebbs and flows like everything else.
Absolutely. And that's why if they can get any penny back, it counts, right? So that's why it's important that they know about these rebates. Rami, I'm sure people are wondering how you fit into the picture. So tell us a little bit about how you help clients.
I help clients with just my background. I've been in financial planning and financial advisor, recently retired. Just last year before COVID, it seemed like a good time, or just during COVID, it seemed like a good time, and handed the practice over to my son. But 9 years ago, I helped a couple clients who built new homes get the rebates. And they, when I started talking to the architects and the contractors and the trades and real estate agents, it had been a rebate that had only been around for a couple of years on the provincial side, the big side. As again, the federal rebate had been around since 1991, but being in the GTA, you didn't come across that many properties that were worth less than $450,000. So, it wasn't a big rebate that was available in the GTA. But these people built new homes in Toronto, helped them get back the rebate. But what I found was there was a lot of ignorance about the rebate, and started networking with the contractors and real estate agents, etc. And they would identify clients who would be eligible, and I help people get back this money. But there's one rebate we still haven't talked about, which is owner-built homes and substantial renovations. And we did touch on it, but that's the more complicated of the rebate applications, because you have to gather all your invoices together. So if I were to knock down my home and build a new home as my primary residence or substantially renovate it, I would gather all my invoices related to construction, whether I used a contractor or whether I was my own general contractor and hired the trades myself. And I would gather all those invoices related to construction, the framing, the demolition, the foundation, the windows, the doors, the lighting fixtures, the plumbing fixtures, the door handles, the flooring, et cetera, et cetera, et cetera, and chart them all. So, and you have to show the government what you spent the money on. For example, I spent it on windows. I spent it on insulation. You'd have to identify to the government who you bought it from. So the company, for example, who was the window company. You then have to tell the government what their business number is. And then you have to tell the government when you bought it. And this all comes off the invoices. When you bought it, what the invoice number was, what the total amount that you spent, and what the HST you spent. And you got to put it in this very big chart. And then you do the calculations. And as long as you spent $300,000 or more, thereabouts, the actual number is $302,840. You will get the maximum rebate, which is $16,080. However, you can get back more if you buy a piece of development land. It doesn't happen in Toronto because there are no development lots in Toronto. So you go to Newmarket, or you go to Aurora, or even Mississauga, Caledon, etc., and you buy land and you pay HST on that land, and then you build a home for yourself as your primary residence, you can get back $24,000. And again, it's a 2-year time limit from when you finish the project, when you actually completed construction or moved in. I want to go back though to one area that is a tricky area, which is when you purchase from a builder. Now, most people will buy, when they buy new, will buy a new home from a subdivision developer, a reputable developer. And as I said before, the rebate is included in the statement of closing adjustments, you don't have to make application. Or they'll buy the condo from condo development, and again, you don't have to worry about that application because it's all handled in your statement of closing adjustments. But what if you buy a one-off home that a builder decides to spec? I see it all the time in Toronto. Builder takes an existing bungalow and takes the roof off, guts the interior, doesn't take the whole thing down, and builds a nice new modern looking 2-story with all the amenities, nice finishes, beautiful modern looking home, where it was just an older, let's say 60s or 70s bungalow before, even predating that. That home is subject to HST. But often these builders try to represent those homes as resale homes, or they don't understand that that a substantial renovation, based on what the federal government says, is new construction. It doesn't have to be new from the ground up for the federal government to consider that subject to HST or exempt from HST. As long as it meets their criteria of substantial renovation, which is 90% gut. All 4 walls can remain standing too. If you gut the interior by removing all the drywall and taking it off to brick and stud, and you have the intent to sell it for a profit and engage in a business activity, doesn't matter if you're a corporation or an individual who's just doing it once, that home is subject to HST. And if the HST isn't handled properly, then the buyer of that property can in fact apply for the rebate. And then the builder of that property, because of housing prices in Toronto, they sell it, for example, for 1.5 million, which is not an atypical price in Toronto. They could be on the hook for $150,000 or $160,000 of HST that is embedded in that purchase price of 1.4 million, 1.4, 1.5, etc. And there have been many cases like that. You have to understand, the lawyers, the real estate lawyers have to understand the HST implications. But in some cases, the lawyers can be forgiven because all they're looking at is a transaction. They don't know if it's new construction or not. Mm-hmm. They don't know the extent of a renovation. And so it's not their job to look at that. They're relying on their clients to say, hey, I'm closing this property, can you close it for me? And they don't really have to understand the HST implications about that. But I believe real estate agents should.
Okay. Or they go to a professional like yourself who will take care of everything.
Exactly. So when I do this, it's a sort of a 3-step process. I will take a look to see, and I've got a number out there right now that are being examined by the HST department. A client will come to me and say, Rami, I bought this home from a builder. I say, okay, let's determine if it's new construction, and I can go to the city of Toronto and determine that, hey, a new building permit was issued. So it's new construction, but that doesn't necessarily mean it's subject to HST. Again, it's based on intent. Was the intent of this builder to move in or not? Well, then I look, well, who's the vendor? Who's the builder? Well, if it's a numbered company, then for sure their intent was to sell it for a profit, to engage in a business activity. So that's step 2. And step 3 is to determine if the purchaser is the first occupant of that home. Because in order to be eligible for the rebate, they have to be the first occupant of that home. If the builder perhaps put a renter in there before, then they won't be eligible for the rebate. But again, that doesn't exempt the builder from being liable for the HST because it's new construction and subject to HST. So it's a bit of a complicated situation, but people who buy new homes, one-off homes, wherever they are, could be eligible for a $24,000 rebate, depending on the situation, if they bought from a builder who was engaged in a building activity. Now, in Ontario, new construction is covered by Tarion, and Tarion has requirements of builders. If you're a Tarion builder, you come with a lot of credibility because you have to register with Tarion. There's certain financial considerations. And if you're building a new home, there's warranties involved in it too. Often these one-off builders are not registered with Tarion. And it should be a warning sign to buyers who buy these type of homes, because they're not necessarily protected on sort of warranty issues. If something goes wrong, the builder they don't have any kind of way to make this builder responsible for deficiencies. But if it's a Tarion builder, so you buy a condo from a Tarion condo, you buy a subdivision home from a Tarion covered subdivision, you're protected for deficiencies. Something goes wrong, the builder is responsible for fixing it. You have a leaky basement, you have a water not turning on, electrical problem, and that is covered by the warranty, then you have some issues that you can deal with that will be covered by your Tarion warranty. But these one-off situations can be dangerous.
Bottom line, though, if anyone is in doubt of if they're eligible or not, if they give you a call, you'll be able to find out what they're eligible for and handle everything. And all they have to do is wait for that check.
Exactly. I try to make it as painless as possible, the least amount of effort from the client as possible. My guess is 40% of the time people don't apply for this. They'll buy it as an investment. They're totally unaware that they can get this very significant rebate back on assignment as well. They're not aware that they have to apply for it after the fact. And also on the assignment side, not getting as much as they should be getting, because as I say, I would gather that 70 to 80% of these assignment sales are not because people had the intent to move in and because of some event couldn't move in, but it's because they're flipping it for a profit. And the buyers of those particular condominiums, the assignees, can get more back than they thought.
Hey everyone, I hope you found that interview informative. Now, if you want to see more videos like this, please subscribe to this channel. Also, be sure to give this video a like and also share this video with anyone that you know that's looking to buy a home, especially a new construction. Thanks so much for watching, guys. I will see you all in my next video. Thank you.